morning. Today we are so lucky to have David Stein join us on Mineral Wealth, where we're just going to casually go back and forth as if we were sipping coffee in a cafe or in a backyard barbecue. So this will be authentic, natural, and pretty much unrehearsed. And we're going to do this hopefully on a weekly or regular basis. So good morning to you, David.
Morning, John. Good to see you.
Likewise, and it's our honor. We're grateful you joined us. And I think the first thing I'd like to discuss is 2022 and 2023 are shaping up to be rough. Though we're told sometimes that the economy's on fire, it's still good to get into reality. And what are you seeing as things that have been overvalued, maybe in 5-year windows, or just even though we're sort of entering a bear market, there have been things overvalued, correct?
Yeah, well, like, the narrative that, that I've been hearing on the big macro market side is that the COVID, blip that we had in 2020, which was really, really short-lived, was the bear market, and now we're starting in a new bull market. Again, this is for broader stocks here, which I don't think the fundamentals support that. I think we should be going into a bear market, given higher interest rates. That's a massive reason for people to change their investment portfolio away from stocks. And so when we do look at the markets overall, you see that, by and large, the gains have been concentrated among the top few mega cap stocks. I think they refer to them as the 7 now.
Wow.
But
so there's no breadth. There's no breadth or depth.
There's no breadth. And of course, as I'm involved in the capital markets as well, in public companies, and we live and breathe that every day. There's absolutely no depth. We're not seeing any real bullishness at this point. It's really, what money is coming into the market is getting sort of sucked up by a very small number of companies. And why does that happen? Well, it's because it's been working, right? So it takes time for that momentum to change and for people to start seeking gains in other asset classes and other stocks. But it will happen. There will be a time very soon, I think, that those 7 stocks will dramatically underperform because they're already overvalued. And, I think everyone that buys them today knows they're overvalued. It's just that they're sort of the safe plays right now. And, at some point people will be looking for higher gains, and they'll take on more risk, and they'll sort of move down cap. And, that's really what will be, I think, the indicator of a legit bull market when that starts to happen.
Well, that's an excellent summary. I remember writing a year-end review or report or summary of 2022. And even though a lot of our fans and viewers, sorry, I didn't mean to use the word fans, that's to infer someone likes me. I meant to say a lot of our viewers have complained about the price of silver and gold, and I have to remind them that silver and gold were up 63% over Netflix. I believe they were up 65% over Tesla, and even 44% over other blue chippers like, Disney, and did well against Apple and Google and FANG, but
yeah.
Even, and Netflix, who doesn't tune into Netflix every day? But it's just an indicator of how overvalued they are. But let's go pivot now to we're talking about maybe a commodity boom that's been prophesized. And what does it look like in terms of the overall, let's just say, since we've been distracted with technology, what has happened to natural resources in terms of investment? including silver, gold, and other, I know oil isn't a mineral, but it's a mineral resource. What's your feeling about that?
Well, I think in the broader commodities and metals and mining in particular, I don't follow oil as closely, has been in a 13-year bear market. I think the sort of the peak was around, sometime in 2012, 2013, depending on what, index you use. And, here we are 10 years later. And, there's been some blips here and there, but it's been very commodity specific. And so that, and so there's been blips, for example, nickel, right? We all know the nickel story, and, guy was short on the LME. It was a very sort of specific, fundamental story to that metal. There's been times over the last 10 years that, we've had a big run in gold or silver for a few months and then sort of give it back. Really you can actually go through all the metals, and they've probably all had some winning quarters and years. But when you actually look over the whole 10-year period, haven't done much. And more importantly, the commodity as a whole, haven't been performing, like you would expect in a bull market. And what I mean by that is that when we get into a commodities bull market, it's different, because basically all the commodities run at the same time. Okay. And, it's not just like nickel goes for 3 months and then zinc goes for a couple months and then falls back down. That's not what we're looking for. We're looking for like a sustainable, secular market that lasts for many, many years. And we saw that in the early 2000s. And, I think, the macro factors are playing into that today. So we've got lack of, investment in the sector, consolidation as well, which they kind of go hand in hand, right? Because if you buy someone, you're not going to, you're putting that money to another company, you're probably not going to take that money and then go build a new mine, right? So there's been overall less investment in the sector, in terms of new production, and that's been going on for, again, about 10 years. And meanwhile, I think, demand continues to tick up with global growth. Some commodities are faster than others. And then, we've also had a very strong US dollar for a while. And of course, all commodities are, in the indexes that we look at are priced in US dollars. So, so all those factors have sort of contributed to the mess that we're in right now. But, again, that's the best time to buy if you have the guts.
Well, thanks for that explanation. And I'm kind of picking up on a key theme, what you said, in terms of almost like that metaphor that all the boats rise together. And against a backdrop of, we all know, like it or not, I happen to like the idea of of an energy grid that's smarter. There's no problem with that. It doesn't mean that fossil fuels are bad and we're ever going to phase out the internal combustion engine. Why would we? So it's good to have that and the other. They don't have to be mutually exclusive. But when we talk about, like, for instance, an electric bus or an electric 18-wheeler is going to need 8,000 pounds of copper. And we just don't see that when we hear of Budweiser and Amazon rolling out fleets of electric buses, that perhaps the mining effort won't even get to even a generation for the metals we're going to need. So we know, then, we just paraphrased together that the bright and shiny tech stocks were overvalued, yet the more, let's just call them raw materials, natural resources, the things we all need for the next generation, are been underinvested in. It just does seem like a no-brainer that this is going to happen. It's a when question, not if. So let's discuss then, if we get positioned, and we're not going to choose any stocks or anything like that. But if we get positioned for this commodity bull run, there are some myths out there that some of our viewers, we can tell through some backlash in the Reddit comment thread that there's a backlash. And one myth I'd like you to address is that new mining activity, and let's just take silver, somehow is a threat to your existing stack of silver. Could you elaborate on perhaps why that's a myth?
Yeah, well, so I think first of all, what a generalist person needs to understand about the mining sector, and this goes for any commodity, is that generally when you start a mine up, the best years of the mine in terms of the production are the first few. And there's reasons for that, but ultimately, you design a mine, if you can, to maximize the cash flows up front, because, you want to pay it back. You want to generate a higher return for your shareholders or whatever, investors. So, so that, across the entire industry, that tends to be how mines are designed. And what that means is that essentially every commodity is fighting declining production. So unless new mines are being opened like all the time, which again, if you go back to a few minutes ago, we talked about how for 10 years there's been an underinvestment in mining. It's not happening. So, so the trend is always going to be downward sloping in terms of mine production. Okay. And the only time and I guess the other thing is that then there's a huge lag on when that changes. So, and the reason of that lag is because it actually takes a long time to get mines into production, or even to expand an existing mine, because you need permits, you need money, the financing part of it, which again, I think is a huge issue. And so, and even if you go back to, let's say, the late 2000s, 2006 to 2011, there was a huge boom in mining at the time, but that was in an area of declining interest rates and lower interest rates. And, we don't have that today. And of course, a great deal of mining investment is financed by debt. So really the cards are stacked against new mine production in general. Okay. Now you look at silver specifically, a lot of silver mines out there are actually quite small in the grand scheme of things. So a mine here or there is not going to make any material difference to the overall market. A lot of silver mining is actually done by, it actually comes from byproducts of other metal mining. So again, but it's not one metal. It's like there's a good chunk that comes from gold mining. There's a good chunk from copper. There's a good chunk from zinc. So depending on how those commodities do over a 5-year period, you may get some growth in production there. You may not, right? Again, depending on how things go, but at least it's diversified. And you're not sort of dependent on one commodity for your mine supply. So I think when you put all those things together, the reality is that when there is a significant demand for silver, for the monetary aspect of it, especially when people want to own silver as an investment and as a way to protect against inflation, etc., mine supply is not going to be really a material factor in determining the price.
Thanks for that. That's well said, and it makes me think of a few things. If I can just follow up, and then I'll get to the second question. The second big myth out there is we all acknowledge we're going to need silver for the things we enjoy in terms of, especially with solar panels. A lot of us talk about living off the grid, where solar panels are just massive component of that lifestyle choice. And then we talk about the, our mobile phones, this device we're on right now, all the computers, medical devices. So we can get into the 10,000 uses of silver, and you're much better at that. But I guess a short answer could also be that if we didn't bring new silver into the world, silver would be extinct. And that would be an ugly world to live in. I mean, for instance, we don't all have the Roman coins that were the denarii or the denarius, or the first coins from the mines of Lorient during the Peloponnesian War. And few of us have those with the cute little owl on one side, and I think Athena, the goddess, on the other side. So I get what you're saying there, that there's really no threat as stackers, that we need our miners. We need them desperately, and they've been underinvested in. The second question I have for you, David, is there seems to be a myth that if we go into a recession, and I believe we're already there. It was reported yesterday, the Netherlands officially declared they're in a recession, and that's the strongest economy in Europe. So we're here in our recession, and there's a myth out there that during a recession, because of the industrial uses of silver, that there's less demand for silver. So you sort of touched on that a bit with the monetary, but expand on that myth and help bust that myth for us, David. Thank you.
Sure. Look, so there's no question silver has a huge number of uses in the industrial side. And you're right, you make a good point that, we need it for everything that we're doing. Silver is really important. It's got unique physical properties that make it pretty much irreplaceable in a lot of, in a lot of applications. And, and like anything else, demand could fall or could weaken a little bit based on, a recession, any consumer products, right? However, the thing that silver has is that it's got the monetary aspect as well, that other metals don't have. So, it's sort of both. It sort of sits in both sides. It's got those industrial uses that are really important, and I think ultimately that sort of underpins or puts a downside protection on the value of silver. But the upside is really driven by the monetary aspect of it, and the need to own silver as real money, or the desire to own it as real money. So, and that correlates very closely with the fundamentals of gold. So, I think it's really worth thinking about gold and silver together. And, as you probably know, there's times in recessions where gold and silver actually go up in value. Because, US dollar is weakening, because, people are, stagflation could be a symptom of a recession, in which case you want to own gold and silver. We saw that in the 70s. So I think there's lots of cases where gold and silver can do really well. And even if they just hold their value while everything else is going down, they're still outperforming. That's another way to think of it, right? You want to, you can have some safety there while everything else is going down. So, there can be these very, very short periods of time, and we've seen them over the last 20 some years where everything goes down, including gold and silver. That's really during a liquidity crisis, because people just need to sell something to get liquidity. That definitely happened during the credit crisis, but if you look what happened after that, gold and silver were the first thing to rebound back up again. So, if you shut your eyes for that, that few weeks where everything went down and then open them again, you'd be actually in a pretty good positive place. So, there's all sorts of different, types of markets in a recession, I guess. But at the end of the day, I think, gold and silver are good things to own in your portfolio as diversification. This is not investment advice, but this is my opinion. and again, I think we can make the case that, in a lot of circumstances, they will outperform other asset classes.
That's a really good answer, and I'm glad you sort of talked about the dual use of silver as monetary and industrial. And I think another component that makes silver a bit recession proof, and we're starting to do research on this, is the enormous amount of use of silver in military applications. And none of that research is easy to find, but we're beginning to stumble on some declassified information on just the massive amounts that are used in night vision goggles, bullets, shells, nuclear warheads, even the batteries themselves that power the submarines and the rockets, because silver is still considered the best conductor. And I think next week when we have you on, David, I want to get a little more into your background, because I think I've never met someone that has this unique sort of skill set where, and I'd like you to just to sort of tease the audience with this, that you've been on 3 different sides, like as a buyer, seller, and even the corporate side. I'm just going off of memory, but could you just sort of illuminate us on that sort of unique skill set, please, David?
Yeah, so in my career, I actually was sort of trained in university as on the technical side. I did a Bachelor in Engineering, Master's in Geology. So I sort of came out thinking I was going to be a field geologist, and then I ended up getting into the capital markets, putting on a suit and tie, and the rest is history, so to speak. So, but in the 20 some years now that I've been in capital markets, basically the money side of mining and metals. I've worked on the sort of broker dealer investment banking side. So that's what we call the sell side, in the business lingo. And then I've worked for a fund. So that's what we call the buy side. So I've been an investment manager as well. And then more recently on the corporate side. So actually running a company. So so I've sort of, those are probably the three big aspects of the, in terms of the mining business when it comes to public companies. I've had an experience on all 3 of them at this point now. So that is, I think, pretty special. And that's been, it's been fun. There's been lots of tough years, but there's been some very, very good ones as well. So that's why we do this.
Yeah, I think you like to keep your life. They say variety is the spice of life, and you've certainly lived that. And I want to just conclude by saying that one weakness of mine is that I tend to get emotional, and as a lot of us apes do, we sort of somehow get into a mindset that can get a little bit cult-like in our thoughts. So it's good for us to bring on someone like David Stein that can sort of give us more of a balanced look at these larger forces in play in the market, and not just with metals, but from the buy side, the sell side, and the corporate side. And it sounds like when you talk about the production of silver and the milling, the discovery, the permitting, one of the most exhaustive things I would imagine would be the fundraising. And I want to get into that next week, if you're okay with talking about the grueling aspect of the roadshow and things like that, because I think all of that boots on the ground stuff sort of is relevant. If you don't mind disclosing that next week when we speak. And
yeah, so let's do it. I'm happy to educate and share my experience.
Okay, so you don't mind helping out the apes, because we're
exactly.
Well, thank you, because it's Apes Together Strong, and we were just lucky enough to have a guy that used to put on a suit and tie, and this was David Stein.
Well, this summer.
Yeah, I got you. I got you. And we're going to be visiting his project in north of Toronto. I forgot the name of the bay. What will I fly into? What city is that called?
Oh, North Bay.
North Bay, correct. And what is that Kuya discovery called?
So the project is called the Silver Kings Project.
Okay.
That's named after a turn of the century hockey team, by the way. But we also love the metal, and that's what we're looking for. So it works, and it's like a double entendre. Yeah, so that's the project, and it's basically by the historic mining town of Cobalt, Ontario.
Also named after a metal.
Yes.
Interesting. Yeah. And there's something special about that property that I read, but I can't quite recall, that has to do with the ore grade, if you don't mind, just for next week. So I like to have sort of a lead in what we're going to see. Okay, what is it?
Well, I mean, I think our discovery that we made there earlier this year was, probably one of the most high grade intercepts in the camp for many, many decades. I mean, diamond drilling hasn't been around that long, so it might be the best hole ever. We had 3.3 meters of over 15,000 grams per ton silver, which is 1.5% silver. So if you want to think about it that way, usually when you hear about silver intercepts, they're in hundreds of grams per ton. We're in the tens of thousands here. So with that intercept, and we had another one that was 2,500 or 2,400, something like that as well. So really, really high grade. You can actually see the silver in the rock, which is really cool. We're very excited about it.
So what you're saying is I'll need more than my pickaxe if we're getting into diamond drills, right? A little more manpower.
Well, our drill core is under very heavy security, but
okay,
if you're lucky, some of the rock piles near some of the old mines actually still have silver. We actually still find silver laying around. So you bring your metal detector and show you where to look.
I'm glad you warned me about the security. That's very important, that there's no guerrilla activity. So we won't give the precise coordinates to our
just don't touch our drill core, okay?
Yeah, I get you. Okay, David, until about a week from now, we will discuss this later, and hang around for a sec off air and we can visit it some more.
Absolutely.
All right. So this concludes the broadcast. We're grateful to have David on, and thank you again for joining us.